A world powered by the blockchain is being formed right in front of our eyes. Experts are calling it the Internet 3.0, the next digital revolution. It's leaving many investors and even institutions looking for a path to take an early position in this massive opportunity. Bitcoin, Ethereum, Ripple, Dash, it's all speculation at this point. But what is certain is that the most profitable businesses for cryptocurrency and the blockchain is in the actual creation of these coins. This is why some of the top early adopters of Bitcoin, blockchain miners, fund managers, and even billionaires have come together to create a new vehicle to invest in the blockchain core itself. Get immediate access to this new company by going to crushthestreet.com/Bitcoin.
Hello everyone and welcome into crushthestreet.com. I'm Kenneth Amaduri and I'm joined today with the very popular John Rubino of dollarcollapse.com. And I got to tell you guys, we have scheduled very timely interviews with Mr. Rubino at crucial events in history. We talked right after Brexit and we talked right as Trump was elected, and really get the feel for what is going on in the news and as it relates to the world of finance. And today I want to talk with John about the economy, but really about what we're seeing in Bitcoin and just the sentiment in the precious metals community. And of course we have the new news, recent news of Bitcoin being included for the CME Group in the derivatives market, which is excited the market quite a bit. Bitcoin has launched over $7,000 and it's moving around now. But nonetheless, without any further ado, John, thanks for coming on Crush the Street with me today.
Hey, Kenneth, thanks for having me on.
John, many people now have seen that Max Keiser, Peter Schiff debate on Bitcoin that was done, a couple months ago. And, you know, Peter Schiff is a major outspoken Bitcoin critic, going as far as to say that he thinks it'll go worthless. It'll be worth pennies or nothing. And, you know, I don't think that at all, actually. But I would say that a lot of Peter Schiff's concerns are the reason why I never went all in on Bitcoin. I've bought into it. I've exposed myself to the cryptocurrency, but I didn't put everything I had into it. And but you know, I want to talk to you today. Maybe get your initial thoughts on cryptocurrency, specifically Bitcoin, and if you see any underlying value to Bitcoin in the world we live in.
Well, I love the idea of cryptocurrencies. You know, that's kind of part of the libertarian utopia out there, where we have private sector money that is independent of government central banks and regulatory agencies, et cetera, and that is valued based on market forces rather than political expediency. You know, so in that sense, cryptocurrencies are very cool. You know, they're the culmination of going on 30 years now of work. You know, we've tried cyber currencies in the past, and they always failed. But it was only when Bitcoin was introduced that we got one that was actually potentially viable. And what's been happening lately, where the price of Bitcoin has been exploding and new currencies are being introduced really on a daily basis. We've got, what, 1,000 and some new Bitcoin wannabes out there. That's introducing, you know, some wild cards into this market, because we still don't know exactly how cryptocurrencies are going to function in the monetary system in the future, because there's so many questions that haven't yet been answered. One of them is how governments are going to respond to an actual threat to their fiat currencies if cryptocurrencies get big. And that's happening today. Governments are all trying to work out their own policies relative to Bitcoin and the other cryptocurrencies. And you're seeing China take one extreme where they're opposing it. You know, they've banned Bitcoin exchanges and imposed other restrictions. And Japan, for instance, at the other end of the spectrum, being pretty hospitable. You know, they seem to be on the verge of making it legal tender there. And the U.S. is somewhere in between, still trying to figure out what to do. And that matters greatly to whether cryptocurrencies become major currencies in the global financial system, say a decade from now? Because right now they're assets, basically. They're not means of exchange, but they're assets that are getting a lot more valuable going forward, and the supply of them is increasing exponentially. And it's going to be really interesting to see 5 years from now whether we actually transact in Bitcoin or Ethereum or one of the variations of Bitcoin that happen after these forks, or whether it's an asset that is stored somehow in the hope that it goes up in value the way we do with gold and silver now.
John, is there any distinction, though, that you would make between Bitcoin and the other cryptocurrencies? Because the other cryptocurrencies have somewhat of a central point of attack. They have an office, there's someone at the top. Even Litecoin, as distributed as it is, has Charlie Lee at the top. But Bitcoin is really just like the internet, and it's really out of the hands of control of the enforcement. Sure, you can attempt to regulate it, you can attempt to shut some aspects of use down, but if people really needed it, which many people did in Venezuela, Argentina, Cyprus, you have these use cases for it where people just want something to transfer their wealth and that underlying fundamental value. And I think that's something that Peter Schiff kind of discounts, the underlying fundamental value, the transaction network that we're seeing in Bitcoin that has just absolutely taken off. And sure, it doesn't have that long-term history of something like gold and silver, but there's certainly something to say about the momentum that has been built up. And like Amazon is a first mover, for instance, and it's a monster. And you have the HTTP protocol for the internet. There's a many different other internets that can come out, but I mean, everyone's using that one. And I'm not trying to, convince you of that or to assume you're taking the other side of it. But I'm just wondering, is there a difference, though, that we can value and say Bitcoin has unique properties that people really want?
Well, yes and no. On the positive side about Bitcoin, it's, as you said, it's a distributed system. So there's no real point of attack, single point of attack. If somebody wants to regulate it out of existence or, hack its central office, there's nothing like that. But a government, for instance, could make Bitcoin just illegal. They could declare it illegal. And then possibly, because you've got the internet, you could still transact in Bitcoin, but then you become a criminal. And that changes the nature of that relationship. Sort of like what we did with gold in 1934. We made gold ownership illegal in the US. So a lot of people still kept their gold, but they were defined by the government as criminals from that day forward. So it's possible for governments to mess with something like Bitcoin. On the other hand, Bitcoin has built-in limitations to its supply, which means that unlike today's fiat currencies, you can predict how many Bitcoin there will be in the future, which means that scarcity will support its value in a way that isn't true of the dollar and the euro and the yen. So it's got some fundamental value because of its limited supply. On yet another hand, Bitcoin is doing these forks now where, it bumps up against supply constraints and then it just divides itself in half and creates another kind of Bitcoin, which kind of defeats the purpose of supply limitations. At the same time that you've got all these ICOs, these initial coin offerings happening out there. So the total supply of cryptocurrency in the world is exploding right now. It's kind of like tech stocks in the 1990s, where anything with the .com attached to its name could go public and attract a lot of money. And so you had the supply of .com equities out there just go crazy until the whole system broke down. So that's one of the challenges for cryptocurrencies is, Bitcoin itself has a limited supply going forward and a predictable supply going forward, but the cryptocurrency universe itself does not. and the supply of cryptocurrencies in aggregate is exploding. And so what does that mean for the cryptocurrency network out there? Does it mean that we're going to have a dot-com kind of crash at some point where the good cryptocurrencies survive and the 95% that are not best of breed just cease to exist? And how does that play into your investment thesis with cryptocurrencies? Do you only want to buy, Bitcoin, which is like the treasury bond of cryptocurrencies, or do you want to go with the smaller ones that have 10-bagger potential this month? And so this is complicated, and it's not clear how it all works out in the end. And my ideal scenario for the future of money in the world is to have gold and silver be the base money, the risk-free financial asset that lives in a vault somewhere, and that we transact that gold and silver via some kind of blockchain technology like Bitcoin. So you link those two concepts and you get potentially a really powerful form of money where it works as a store of value and as a medium of exchange and as a communications medium for you to be able to express value across different platforms and different systems. It's possible that we end up there, but we've got a lot of interesting stuff in the meantime. Lots of challenges that have to be overcome, and a lot of unpredictable things, because so much of it depends on what guys sitting around conference tables at the Fed or the ECB or the Bank of Japan or the Kremlin or wherever decide to do under pressure when their currencies are under attack and everything's changing around them. So I don't think you can predict anything about Bitcoin or the cryptocurrency space in general with any kind of certainty going forward, because there's just so much that's inherently unpredictable. But I think it's a fascinating time, because anytime a new technology is introduced to an economic ecosystem, the creative destruction that happens is pure capitalism. It's really interesting from a theoretical standpoint to watch some new thing come along that has advantages over the old established entities and wipe out a lot of them. Amazon, as you mentioned before, did that to the retailing sector of the whole world, and that's still ongoing. Retail apocalypse is a big story for the next couple of years.
John, I actually tend to agree with you quite a bit. And these are a lot of the reasons why I think a lot of us, got into Bitcoin as it climbed this wall of worry, but it continues to show itself resilient. And that's one of the things I find really fascinating about Bitcoin. And you kind of have to have the guts to jump in it and assume that a lot of the infrastructure is going to continue to be built out. And that's why I respect a lot of guys who were just the early adopters of it and were able to see, way down the line. And sure enough, we have the CME Group, the largest diverse derivatives marketplace, has recently announced that it intends to launch Bitcoin futures. And of course, this has caused the price of Bitcoin to skyrocket. And I know this has a lot of implications, and some people are worried about it, and some people are seeing this as a positive. In the world of $120 billion market cap Bitcoin, what does this mean to you?
Well, it's potentially a really big deal, because it gives you ways to own Bitcoin that don't require a lot of technical knowledge. If there's a futures contract for Bitcoin and an ETF, which is the next logical step in the expansion of this market, where you can just buy Bitcoin like a stock because you're buying the ETF, then all of a sudden people who are resistant to jumping into cryptocurrencies because they really don't understand how it works technically, have a way to do it that they do understand. And so that expands the market pretty dramatically. So that could be a big deal for Bitcoin in particular, and then maybe the other cryptocurrencies, that if Bitcoin works via an ETF or futures contracts, they start adding Ethereum and the other cryptocurrencies to that complex. It could be a big deal for them. It was for gold and silver. Remember, gold and silver ETFs were relatively new a decade ago. And once they started, that was a big part of the bull market that happened between 2000 and 2011. because it was a new source of demand. In this case, cryptocurrencies are still such a small market that if a new source of demand that is broad-based emerges from futures contracts and an ETF, that could have a huge impact on these guys. But again, at the same time, the supply of cryptocurrencies in the aggregate is unlimited. And the further up the price goes, the more new currencies will be released, and the higher the faster the supply will grow. And that creates a lot of instability out there. You get it in a growing market, for instance, like microchips, you get these huge price spikes and then a collapse because of oversupply. And it makes the market incredibly volatile, even while the underlying market is growing year after year. So we're going to face very probably something like that in the cryptocurrency space, where it's accepted and people get really excited about it, but that makes it extremely volatile, because then you've got supply issues where everybody's jumping into the ICO market. So that makes cryptocurrencies very risky going forward. You can't assume that they're going to go up in a straight line, even if the market continues to grow. So you got to be really careful about speculating in a market that is in this stage of its development, where it's extremely volatile.
Sure.
So don't bet the farm on something like this, even if you think it's going to grow 10 times in the next 10 years. Because it could drop by 50% before it takes off again. And so unless you're prepared to lose half your money in a super volatile market like this, you need to be pretty careful about how you approach it.
I don't think anyone would disagree with you. Anyone that's being honest with themselves, even the bullish of bulls out there in the Bitcoin space. Now, John, does something like this continue to add, and I'm just trying to extrapolate this a little more, something like the CME, including Bitcoin as a derivative, does it continue to add to its Amazon type dominance or Google type dominance? And is it possible that a lot of the other cryptocurrencies go away and people really begin to buy into Bitcoin as the gold standard?
Yeah, it's possible. And that's what happened in the dot-com bubble. You had a lot of Amazon wannabes come along, but only Amazon and a couple of others survived the eventual carnage of the tech stock bubble bursting. Could be the same thing for cryptocurrencies. But it's not a perfect analogy, so we can't know for sure how it's going to play out. But
Sure.
Bitcoin definitely has first mover advantage. It's definitely the dominant force in the cryptocurrency market right now. But these forks, they seem to defeat the purpose of limiting the supply of Bitcoin going forward. And that worries me a little bit, because it might tarnish Bitcoin at some point, when, it goes up and you just divide it in half, and then you've got some other variation of Bitcoin out there. And if those versions of Bitcoin also go up, then, that's like a stock splitting, I guess. And
Sure.
if the company underlying the stock is successful, okay, the total value of what you get goes up. But the supply also rises pretty dramatically. So I think that's a recipe for volatility.
Okay.
We can't know ahead of time whether Bitcoin is going to be the one to survive the eventual carnage of all that volatility, but right now it looks pretty good. If you had to make a bet on cryptocurrencies that was premised on capital preservation, in other words, if you want to be sure that your capital is still there 10 years from now, then Bitcoin is really the only cryptocurrency that you can buy. All the rest of them are much more speculative. But then a lot of those other ones could go up 1,000%. In a heartbeat.
Sure.
So it depends on your point of view as, you're a speculator no matter what in this market, because it's so brand new and unpredictable. But are you a cautious speculator or an aggressive speculator? And that kind of determines which of these things you want to play in.
I think it's still early, and we don't know Bitcoin's full role as it continues to enter the managed money, the institutional money. And I know already people are talking about non-cryptocurrency traders, hedge funds managers, possibly using Bitcoin in, maybe a basket of cryptocurrencies as a portion of their portfolio, just to have a non-correlated asset in their mix. And just this whole idea of this, with the market cap being so small, seems to me like we still have potentially a lot of room to run. I mean, we're talking about Bitcoin having only a $120 billion market cap. And if we do go down that rabbit hole where it really enters the institutional money, my question for you, John, is what should that potentially be? What size of that? I know gold is what, 7-8 trillion. The stock market is obviously much larger than that, but is 120 billion reasonable, or would you expect it to go to 500 billion, 800 billion? Did the calculation a little earlier, and at the current 16.5 million Bitcoins outstanding, that would have to put the market cap at 825 billion if we saw $50,000 Bitcoin, and that's still under $1 trillion. And I know my mind went a lot of directions right there, and there's still a lot of uncertainty, but what's the possibilities of this?
Well, this is the calculation that makes legitimate monetary assets that aren't fiat currencies so exciting. You can say the same thing about gold and silver. If 1% of investable capital in the world flows into precious metals next year, they double or triple. A legitimate competing currency out there, alongside the dollar and the yen and the euro, then the sky is kind of the limit, because there are tens of trillions of dollars of fiat currencies in the world right now, and then hundreds of trillions of fiat currency derivatives out there. Government bonds and corporate bonds and interest rate swaps, stuff like that could legitimately flow into the cryptocurrency space in one way or another. And if that happened, then you're talking about something that is a rounding error right now, rising to the middle of the pack in fiat currencies of the world. That would be, well, like you said, $50,000 Bitcoin could happen easily if Bitcoin takes a place among the major currencies of the world. That's a big step, though. But it's not inconceivable based on what's happened so far, because it's gotten a lot of traction out there as a financial asset, not yet as a medium of exchange. You can't really buy that much with Bitcoin. But people are right now buying it the way they also buy gold and silver, as something that, in their mind, protects them from the fluctuations of fiat currencies. So let that role expand from here, as you said, with futures contracts and maybe an ETF coming along, and then let people start transacting with Bitcoin, because more and more places are accepting it, which is happening now. There's a small drumbeat of announcements going on out there of new places that accept Bitcoin. Let that pick up steam, which it would if this continues, and then you got this critical mass where, boom, it's an actual currency. You can actually buy stuff with Bitcoin. That could be your checking account. When and if that happens, then if it's as big as the yen, that's almost inconceivable from its current size. But at the same time, you've got a lot of roadblocks to that happening, because that's not good for governments. They give up a lot of power if a cryptocurrency starts taking market share from the currency that they have ultimate control over, and that gives them absolutely insane amounts of power. The power to create new currency out of thin air is immense, and governments have that now, and they're not going to give it up easily. So the idea that Bitcoin will just, in this nice smooth arc, go from here to being a major competitor with the world's fiat currencies is probably over optimistic, because the governments are going to strike back in various ways. And then don't forget that the NSA can hack anything. The idea that Bitcoin transactions are secure is also over-optimistic. I think it's completely possible that governments are looking at the rise of cryptocurrencies as a mixed blessing, because on the one hand, it threatens their power over the monetary system. On the other hand, it's transparent to them. And it allows them to see in real time what we're doing financially, and to manipulate what we're doing financially. It can intercept signals, in theory, and redirect flows of funds, which you can do now with our brokerage accounts and our bank accounts. But this is yet another way that they can do that. And in that sense, it gives them more power over us. So it's not clear to me yet whether cryptocurrencies are a force for freedom or a means of repression. And that's yet another thing that's going to have to be figured out going forward, because this is uncharted territory. It's brand new. We've never had the rise of a private sector currency at the same time that the NSA and the other spy agencies around the world have this kind of ability to hack what's going on in the internet. So I don't know. There's just so many moving parts to this story.
Absolutely. Well, and you got to consider, too, that there are aspects of anonymity that Bitcoin has, and I know people go out of their way to transact anonymously or with cash, but the majority of people are getting in with things like Coinbase and handing over all of their credentials, and that's obviously very traceable, and they know, the governments know what's going on. So that's interesting points. John, one of the things that you mentioned, and in terms of potential attacks towards Bitcoin, was the first thing I thought of when the CME Group wanted to include Bitcoin as a derivative, and that is naked shorting. And what we've seen with gold and silver in the futures market. And I want to know if you think that this is a valid concern for Bitcoin, or is this something that is not going to happen in your opinion?
No, I think that's a really good point. The futures markets, at least a lot of people think, the futures markets are used to manipulate the price of the underlying assets. I mean, gold is an obvious example of that, where you see the Commitment of Traders report illustrate short-term manipulation on the part of commercials at the expense of the speculators. And Gada, among others, the guys at Gada, believe that that's part of an overall scheme of governments using the financial markets to suppress the price of gold, because gold is a competitor to the major fiat currencies. Well, if Bitcoin also becomes a competitor, and there are futures markets out there that allow JP Morgan Chase or Citigroup or somebody to be a proxy for the Fed in manipulating that market, it wouldn't be a surprise to see it happen, because they get away with it now, and they make money doing it. Which kind of brings us around to a really interesting part of this story, which is that banks have had their own way with the financial system for a really long time. They've grown to dominate the government, and via the government, the Fed, and so they basically get to set interest rates in ways that are favorable for them and manipulate prices in ways that allow their prop trading desks to make a ton of money. But this time around, Bitcoin and the other cryptocurrencies are backed by Silicon Valley, which is actually more powerful than the big banks in a lot of ways. If you look at the market caps of the biggest tech companies, they dwarf the market caps of the big banks. So this is a really interesting contest now, where you've got somebody coming into the financial markets that actually might be able to impose their will on Citigroup and JP Morgan Chase, and via the big banks, the government. And that's another wild card out there. We don't know how this is going to play out via the political and the regulatory systems, because we don't know, for instance, how good Silicon Valley is at lobbying. And I suspect they're going to be pretty good, because they've got a lot of money to throw at this. And they would, they don't have any big loyalty to the dollar versus Bitcoin. I think a lot of them see the blockchain as next generation technology, and just like self-driving cars and solar power and next generation computer chips, they just want to bring them on and implement them and change the world and make money. They don't really care about philosophical issues about what is money and stuff like that. And so it's going to be a really interesting contest from that point of view. And again, we can't know how it's going to play out necessarily, but I don't think the outcome is guaranteed. In other words, I don't think the big banks win this one necessarily, because Silicon Valley is powerful enough to give them a run for their money, literally.
Sure. No, that's a powerful thing, and I guess it goes like with anything. There's no way to invest with certainty. In the early days, you would have had to have some foresight to get behind Google as the dominator, or really had some, because Amazon, for instance, never looked cheap. Never. I mean, there's only been a few times, couple quarters of profitability, that stock should be collapsing, and it continues to go higher. And it's just an uncertain world of investing out there. But I guess the fundamental question is Bitcoin sound money? And, ultimately, would you feel more comfortable bearing your cold storage wallet and uncovering it 100 years later, or bearing that same amount in gold and uncovering it 100 years later? And I think most people would say that they would go with the 5,000 year long history and stick with the gold. And I actually would tend to agree with that. But in the short term here, I just think there's a lot of excitement, and I think there's a lot of infrastructure and growth to be had in cryptocurrency. And I'm doing too much talking here, John. I want to get back to you. Let's talk, as we close out this interview, the fundamentals for gold and silver. One of the things that you said prior to jumping on this call, prior to us hitting record here, is that you think in a few years from now, we're going to be talking about gold and silver the way we are talking about Bitcoin. And I actually agree very strongly with you on that. But if you would, let's conclude the interview on this topic.
Sure. Well, yeah, the fundamentals for precious metals are phenomenal, because remember, you have to value them relative to the fiat currencies that we use for measuring sticks out there. We value gold in terms of dollars and euros and yen, and we're systematically destroying the value of those other currencies. Governments are borrowing too much money. They're creating too much currency via their central banks. They're encouraging their private sectors to borrow way too much money. Every level of every society is at record levels of debt right now. Historically, that always leads to pressure to devalue the currency. There's nothing mystical, magical, or historically unprecedented about what's happening now, except for the fact that it's broad-based. Everybody's doing it at the same time. So eventually, we're going to go the same way as the French currency after the French Revolution, or the German currency after World War I, where we have these massive devaluations, maybe hyperinflations of the fiat currencies out there, because there's no other way for the governments to manage their debts other than to do it via currency that gets cheaper year after year after year. So that's going to happen. And when it does, gold and silver, which are limited in supply, we get like 1 or 2% more gold and silver each year by mining it, and that's all. You can't get any more in any other way. Because their supplies are limited, they will hold their value relative to real stuff, and they'll go up dramatically relative to these currencies that have to be inflated away in order to keep the system from imploding. So eventually, gold and silver are going to have price charts that look like Bitcoins today. And we'll be talking about them as, is this a bubble? Is silver at $100 an ounce a bubble, or should we be, riding it out for the long haul? That'll be an interesting conversation when the time comes. And it's inevitable. There's really no way around mass devaluation to get out from under all this debt. Jim Rickards has a really optimistic scenario where he says we'll just do a monetary reset at some point. The powers that be will decide that going back to sound money is the lesser of multiple evils. And one day they'll just announce that the dollar is now backed by gold at $10,000 an ounce. In other words, the dollar will be a name for 1/10,000th of an ounce of gold. And boom, all of a sudden your gold at $1,500 an ounce is now worth $10,000 an ounce. That's the most optimistic scenario that's possible in this. I think that there's going to be a lot of chaos between here and there, and it's going to be very messy. And governments are going to try to oppose precious metals the way they're thinking about opposing Bitcoin. So it's not going to be this easy process where you just wake up and you're rich one day if you own a lot of gold and silver. There will be regulatory stuff and capital controls and wealth confiscations, et cetera, et cetera. But we've just got to get through it all. And gold and silver will be one of the ways that that people do get through what's coming.
John, you mentioned something about gold and silver, and something I've thought about, but I want to ask you to emphasize this a little bit. But that is, once gold and silver start moving, people are going to immediately start calling it a bubble and saying, oh, it's overvalued, it's overvalued. And if we can learn anything from the Bitcoin move, at any moment, there's going to be people calling it a bubble. And there's always that wall of worry that it climbs, and we don't know exactly where it's going to go. But what do you suspect that conversation will look like when gold goes to 3,000 and 5,000? And how do you anticipate that to play out, or how do you anticipate positioning yourself at that time?
Well, that's always the problem with something that's going up. You buy something, you're right that it's undervalued, and it starts to go up. But then how do you value it to know whether to sell or not? That's extremely difficult. And with gold and silver, there are fundamental ways of valuing them. You look at them relative to the amount of fiat currency that exists in the world. In other words, how much paper is out there relative to gold and silver, and what price would you need for gold to balance out the amount of paper currency that's in the world? Right now, that calculation yields $10,000, give or take. If we're hyperinflating the world's currencies at that time, in other words, if we're creating a huge amount of new credit out there in order to push down the value of the currency and to manage the old credit that's blowing up on us, then you've got an increase in the supply of paper currency out there that would, based on that fundamental calculation, pull the value of gold up further, along with the rising supply of paper currencies. So you would have one valuation measure that you can rely on going forward at the time, but it's going to be scary. I mean, if gold goes to $6,000 an ounce, it's going to be tough not to pull the trigger and take your profits, right? Even if you think it could go to 20,000, a bird in the hand, et cetera, et cetera. So it's not going to be easy. It's much easier to decide to buy something that's overvalued than to decide when to sell something that's rising. And I'm not going to pretend to have a great answer for it. So don't call me 5 years from now and say, is this the point where, I won't know.
Yeah, no, it's very true. And a lot of people have 10% of their wealth in gold right now. So if it goes up 10 times, that's going to reflect roughly 100% of where they're at right now. And that would be a substantial move for somebody. And then they would be overallocated in theory to precious metals at that moment. And maybe for that person, it would behoove them to maybe reallocate some of that money. And same thing for people who've done that with cryptocurrencies. They've had, some people put everything they had, they had nothing. So they put their $5,000 paycheck in to Bitcoin, and now it's 50,000, and that's everything they have. And I would tell that person, you might want to rebalance your portfolio a little bit, just because a small move in the price would greatly impact your entire net worth. So I guess those are all things that you really got to assess when you're in that position. But yeah, the uncertainty of the financial world, John, it's like being a weatherman. It's so unpredictable in so many situations. Having said that, John, any just final words? It was a pleasure having you on Crush the Street. I appreciate your insight and your wisdom, and for just being there when we got questions and we want to make some sense of the financial markets.
Yeah, thanks, Kenneth. It's always fun to talk to you. I'm glad we had a chance to do this. Let's leave your listeners with the idea that this, in a lot of ways, is really an unprecedented part of human history. So it's going to be very difficult to know exactly what's going to happen going forward. But I think one thing you can say with a fair degree of certainty is that volatility is going to be a very big deal in our future. Things are going to get crazy. And the more you can do to stabilize the parts of your life that you can control, the better you'll be able to weather the volatility in financial assets and in your employment prospects and in the real estate market. Things are going to get crazy as the fiat currencies of the world start to falter, and the traditional banking system, et cetera, and let alone geopolitics if there's a war or something. So it's a good idea to kind of tend your own garden. In other words, to make your own life as bulletproof as possible, because the outside world, it's not going to be a benign environment going forward. You want to make your neighborhood as benign as possible.
Great thoughts right there, everyone. Everyone, visit John Rubino at dollarcollapse.com, and maybe we won't wait so long to have you on again, John. I think the last time was quite some time ago, so I'm regretful for that. But it was a pleasure having you on, and thank you for coming on Crush the Street.